Hi, I'm Richard Murphy, and this is the 13th in this video series on the importance of tax transparency. In this video, I'm going to talk about why any jurisdiction and any tax authority needs to create a tax strategy. As is the case with much of this series, additional material to support what is being said here can be found in Making Tax Work, which I co-authored with Professor Andrew Baker of Sheffield University on behalf of the Global Initiative for Fiscal Transparency. This went on to underpin their principles for tax transparency. Making Tax Work is a free download from the GIFT website. A tax strategy exists to explain the social, economic, and fiscal goals that a government wishes to achieve through its tax policy. How a government sees the role of tax within its overall fiscal management of the economy. The government's objectives with regard to the redistribution of income and wealth using the tax system. How the government intends to use the tax system to compensate for market failures, most especially when taxing harmful products such as carbon, alcohol and tobacco, and also when providing subsidies through tax reliefs and exemptions for those products it wishes to favour. How the government decides what and who to tax, what a government's philosophy on setting tax rates might be, how tax exemptions, reliefs and allowances are decided upon, the government's approach to its tax administration, its management and its funding, and finally, how the government plans to cooperate internationally on tax issues. In summary, a tax strategy is a high-level policy statement issued by a government that summarizes its approach to taxation. That tax strategy states the goals that the tax system is meant to achieve. The effectiveness of a statement of tax strategy is dependent upon the availability of data on the past performance of the tax system of a jurisdiction, broken down in sufficient detail so that the sources of all the government's income can be reasonably identified. All revenue expenditure incurred by the government can be identified. Capital expenditure can be explained in some detail. The government's surplus or deficit for each period is clearly stated, and what sources of finance were impacted by those surpluses or deficits. For example, was borrowing increased or decreased as a result? What the terms of non-tax funding are, with those sources being explained in some detail so that their costs can be compared to the costs and appropriateness of the use of taxation as an alternative means of funding. This does require that a government must commit to preparing accounts that comply with generally accepted accounting principles for their jurisdiction for each year, with these being comparable over time if they are to be useful. This is a matter referred to in later videos, but since the process of economic management is cyclical, this accounting process is the effective endpoint for 1 year of management and the start point for the next. In an ideal tax system, a government's draft tax strategy should be published. This strategy should also be the subject of a consultation process, with interested parties being encouraged to submit comments on changes that they think appropriate. This process is discussed in more detail in later videos. The tax strategy should also be subject to legislative approval, with discussion being encouraged by legislators prior to the adoption of this plan. This process of approval could be, and probably should be, integrated with the tax budgeting process referred to in later videos in this series. As part of its review process for appraising the effectiveness of its economic management, a government should also undertake an annual review of its success in delivering its tax strategy and update it in the light of that review. Again, this is a process of cyclical review as a consequence, like much of the tax transparency process. In summary, although all aspects of tax transparency are important, without a statement of high-level goals for the tax system, it will not be clear what the goals of the government are with regard to this most fundamental of economic policy issues. The engagement of all interested parties in discussion on this strategy is, as a result, a matter of priority with regard to the management of tax transparency within a jurisdiction.